Hello, my name is Fred Amrine, and welcome to College Affordability, a website that focuses on how to lower your cost of education. This topic is educational tax strategies. Important part here realizes that Amrine Financial and College Affordability are not CPAs or a tax advisory firm, so you need to confirm all this information with your tax advisor. This is where the sophistication starts to grow, as we've talked many times in prior videos, that bringing the college savings plan, the financial aid process, and your taxes all together to lower your out-of-pocket costs are really, really important. Taxes specifically are really interlinked with the EFC calculation and different things you may consider, and they're often overlooked or not understood fully. Again, we've talked about qualifying expenses. This can be different for the tax equation. Some of the tax credits can vary for what they will include or what should be included in those things. But also what's important is you cannot reuse. So this is where the sequence of, am I going to go for a tax credit first and pay the tuition with real dollars to get the tax credit and then use the 529 plan. You cannot reuse or qualified expenses for the same breaks. And probably the biggest issue that people don't realize is the tax years and school years don't match up. That's an important part, especially from a planning standpoint. Here's the list. We call them tax scholarships because it really does provide additional income, and it's directly money that can be saved through your taxes that only happen during the tuition areas. So one of the things there is the educational tax credits. Currently the most popular is the Opportunity Credit. That will expire in 2017. It's been renewed a few years in a row, but again, that's a great resource and especially helps the middle income and above, since the income limits start, if you're fine married and joined, at 160 and phase out at 180. Kiddie tax, this is where if you have assets in your child's name and you cash this out, you may incur a kiddie tax, which means the first $1,900 is tax-free. Anything above that amount will be taxed at the parent's rate. Now we have new tax laws here. You need to be really careful if your child has, a savings account and it has a taxable gain in it. Maybe using multiple years to maximize that tax-free gain should be considered. College savings plans, which we just did that, offer some tax-free benefits that you need to really look at. And if you're self-employed, there's some major advantages there as bringing your child on as an employee and paying at a lower rate. Again, this all needs to be verified and confirmed with your tax advisor. And there's also student loan interest deduction. This again will depend on how you're filing your taxes. You may run into issues depending on how you're going to file your taxes and the repayment plan that you're using, where that may not all work together. Other parts of the tax strategy you need to be aware of. All of them have, or most of them have, some income tax limits. So that's an important part to realize, and they change year to year. So that's an important part you need to realize. Defining of the expenses. So as we talked about the different definitions of qualified expenses, the sequence of use. So you cannot reuse multiple expenses to get multiple tax incentives. So I can't use the same dollars for the tax credit and then use those same tuition dollars for my 529 reimbursement. And a big thing here, it all affects financial aid. So one of the areas that people will look at as using will be taking money out of an IRA under 59.5 because maybe they have a large 529 plan. One of the issues that they may face is using an IRA to pay their tuition versus borrowing the money. Yes, if you're under 59.5 and used for education, you don't have to pay the 10% penalty, but you will have to pay the income tax on that money that was dispersed. In addition, the penalty here would be that the following year your EFC number will go up because that will be reported as income. So you need to be careful. Some of this will impact your EFC positioning going out. Again, the website is College Affordability. My name is Fred Amrine, and we're here to help you pay the lowest education cost you can. Another website that may be helpful is Repay 401, which is focusing on student loans. Have a great day.